All right, folks, check that out. That's right. Eat your heart out. Everyone else except New York City. That's our parade for the NBA champs, the New York Knicks. Although it wasn't an old school, ticker tape parade, we came into the tail end of that. We throw computer papers out. There's still going to be a lot of cleanup. And by the way, my next guest says that might be actually great for your portfolio. Let's bring in Landsberg, Bennett, Private Wealth Management, their CIO, Michael Landsberg. And, you had some ideas, some sort of bottom fishing ideas. And just for the audience, want to kind of talk about the objective there. Obviously, you want to identify these opportunities. Undervalued, the idea is that you get positioned and then later on you get excessive returns.
Absolutely. Because part of it is there's almost two parts of this market, Charles. There's the tech stocks that are rallying, and you look for pullbacks to buy those. But there's other sectors that have been kind of ignored that do offer some value. So we want to look there as well to have a little bit of a balance in portfolio.
What's the typical holding period? You find these ideas. This is a cheap stock. It's an amazing company. It should be higher. One day we believe it will be higher. What do you give yourself on a time?
It depends. On a new purchase, it might be a year, but I'll give you an example. I've owned Broadcom for 12 years in the portfolio. We bought NVIDIA January of 2019. So if we get them right, we're going to ride them as long as we can. But some of these value-oriented stocks, we want to be a little bit more concise with the timing.
All right, so this is one I got cute with Federal Signal with the Nick tie-in because the products that clean streets, market, and recycles waste. Again, not sexy. But these are the kind of names that in a portfolio, you point out they've done so well and it's down from the high.
It is absolutely. The other thing I like about it is it's kind of a closet AI play because they mark roads. Waymo's autonomous driving, you're going to need roads marked better. We saw some problems with Waymo going through some cones this past week. So we think it's a good opportunity to buy something with dividends, with growth that's under the radar.
And I know these are fundamentally based, but I always like to look at the charts too. And I personally see where, it's breaking out. You've got above the major moving averages. Your relative strength is moving higher. All that kind of stuff for me maybe corroborates, this is something that you could be looking at. Royal Caribbean, this is one of the largest cruise liners in the world. Revenue's up 100% since, 2000, benefiting from all this looks great and it's cheap. Well, it's on sale. It's down 15% at least from the high.
It's on sale. We like cruise lines. This is our second favorite. Viking's our number one. Love Viking. Viking's not cheap. Royal Caribbean offers you a nice, cheap opportunity. It's got 3 different segments. It's got kind of low, middle, and high end. Right. And they go everywhere. 7 continents.
When you say it's not cheap, are you talking PE ratio, price to sales ratio, or just or a smattering of metrics?
Well, on Viking, for example, I'm looking at the PE's moved so much and it's up maybe 95% in the last 12 months.
Right.
This has lagged a bit, so we're looking at this thing, I'm looking at where it's going. Oil prices falling is going to be a positive for them. Because obviously that's the biggest input cost they have. Oil prices have spiked. We're starting to see this decline. That should go into the EPS.
Right. And again, the same thing, very similar chart. And it's made a series of lower highs, but on the cusp of breaking out, which could be really absolutely huge. Blue Owl. Okay. So this is sort of at the heart of all the angst when it comes to private credit and private equity. This is the stock that's come down the most. They've got this PIK thing that people are a little concerned about. You do mention it, a leading alternative asset management company. Predictable management fees. Revenue's up 300% since 2022, and yet it's down 50% because people are really concerned. Is this one that do you offer any extra caution on this particular idea?
So this actually is in what we call our distressed portfolio. We actually are going to add this in another week. Don't have it right now. It's one of the few that we don't. The other 2 we own. But we buy stocks that are down and beaten up in one specific portfolio. We hold these for a year. The idea is this has been beaten up more than it needs to be. Did it need to get beaten up? It did. But 50%, considering the stock where it is, the entire sector's come down. This just offers a really, really attractive entry point with very good management.
Right. I mean, again, the chart says it all, right? So you're around 24 and you've been as low as $8. Looks like it's trying to form some sort of a foundation here. What would make you get out of it? I mean, like something like this, I think the bottom's in. I'm willing to hold it for a year. But what would make you exit? Would it be a bad earnings report or something like that?
In our distressed portfolio, we got tight rules on when we get out.
Okay.
So for example, I buy it now, it's down 50%. If it goes down another 10%, we're going to get out. We're going to look for something else.
I got you.
This is really bottom fishing.
Right.
The other ones are kind of on sale.
Right.
This is roadkill.
Right.
It's been left on the side of the road. We want to grab it, be able to buy it here. But I have very, very strict controls on the downside. We don't want this to spiral into some big problem.
And I love what you said earlier. You buy these names, specifically maybe because they're on sale, but as the fundamentals improve, you'll hold them. Some of these major tech stocks that people are chasing now You've been in it for a long time.
Absolutely. And they do give the opportunity. One of the reasons I don't like to chase things is I'll give you an example. Micron's a good example. 2 weeks ago, it was 1090. A week ago, it was 850. Now it's 1140. Well, you take an opportunity to like the stock. Let's have the drops. NVIDIA's given you 25% drops in the last 12 months. You can buy on the drops. We don't need to buy chasing all-time highs.
All right. Good stuff. Appreciate it. Absolutely.